In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. We will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly supply and resistance area. In fact, from here, all this previous rejection to the downside was created again here. The market tested its zone and rejected it to the downside. At the moment, the market is testing exactly that same resistance, from which there is a good probability to see a potential rejection to the downside away from this zone. So here in the monthly, everything seems quite bearish. Dropping down on the weekly, we can see how from a weekly perspective, the market has now created a double top at this zone. We had the first test here, the market rejected its zone to the downside, another test here, and the market is currently rejecting that zone to the downside. Now, in a situation like this, we could expect more potential bearish price action away from this zone, and here on the weekly for the market to continue lower. Going down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about gold a few times in the past. I spoke about it when the market was around this area. I explained all the reasons for which we could expect this potential rejection to the upside. The market gave us that. Then we had this impulse and correction. From here, I made another breakdown explaining all the reasons for which we could expect first this rejection to the upside, then from here a move lower, and then more bullish continuation. And in the last analysis, I explained all the reasons for which we wanted to see this break, correction, and continuation lower, which is what the market seems to be creating at the moment. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, as we can see at the moment, we must notice how, as the market is creating this rejection to the downside, we actually created an impulse and correction. Now, if you want to measure the correction after an impulse, you have to take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how first the market tested at 0.786, then the 0.618, and currently the market is breaking below the 0.382, from which more potential bearish price action could be created. But anyway, at this point, the rejection of previous support and resistance has already happened. So it's time to readjust our analysis here from our previous one and see what we could be looking for potentially next. Now, in a situation like this, if the market from here continues lower, at that point we would essentially have the creation of this M pattern. In fact, if we follow the movement, we can see up, down, again up, and if from here the market will continue lower, it will essentially create an M pattern. And after the creation of an M pattern, we could expect a potential rejection to the upside for the completion of the M pattern at the neckline, before then getting more potential bearish price action. So if from here we will have a rejection lower, at that point we could expect bullish price action to be developed here on gold. Now, this could mean that the market definitely has the possibility of creating this M pattern. If that will be the case, as we said previously, we could expect first the completion of the neckline and then more potential bearish price action. But this would be just a short-term correction for the completion of the M pattern, so definitely still possible. If we will have the creation of this M pattern, how we could be approaching a potential reversal higher? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the potential completion of this M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.